Hi everyone, it's 8 p.m. Let's start the session. Doreen and Watson, are you there?
Yes.
Hi, good evening, everyone.
Hi, good evening.
Hi, evening. Okay, let me start. Good evening, ladies and gentlemen. Thank you for taking your time to join us today. I'm your host and MC and also moderator for today. I'm Jason Wong, the research manager at FSMOne, Malaysia. And today we have a very interesting discussion about the outlook for Malaysia post GE15. And I believe this is a very hot topic today, and we are very privileged to have two distinguished guest speakers who are experts and household names in the investment industry. Without further ado, let me do a quick introduction of our speakers today. First up, we have Doreen Chu, Head of Investments from Eastspring Investments Berhad. Doreen joined Eastspring Investment Berhad in August of 2018 as Head of Investments. With more than 20 years of industry experience, Doreen joined Eastspring from CIMB Principal Asset Management, who is now known as Principal Asset Management, where she held fund management roles from 2005 to 2018. Doreen has been a CFA charter holder since 2002 and holds a first-class Bachelor of Arts degree from the University of Malaya, majoring in economics. We also have Ko Huat Soon, Regional Head of Research from Maybank Asset Management. Huat Soon was appointed as Regional Head of Research on 17th of January 2022, where he manages a team with a goal of identifying and recommending profitable regional investment ideas and stocks to the investment team. Huat Soon was previously the Head of Research for Kenanga Investment Bank Berhad. With 30 years of working experience in the field of equity research and investments, he started his investment banking career as a sell-side equity analyst with a number of research offices that included CLSA, RHB Research, and SocGen. This was followed by a career in fund management where he became CIO at Pacific Mutual Fund Berhad. He holds a bachelor degree in engineering science from Oxford University, England, and an MBA degree from Melbourne University, Australia. He obtained his CFA charter in 2001. So without further ado, let's kickstart the discussion. I believe this election has been a very eventful one for everyone, and I believe Doreen and Huat Soon, who have been through various elections before, would agree with me. And prior to the election, we knew that it was going to be uncertain, right? How did you position your portfolios knowing like it's going to be uncertain in case things went wrong? Perhaps we could start with Doreen. What were the risk management strategies that your fund employed? Did you sell everything and go into cash, wait and see mode, or what else did you do?
All right, thank you. As you know, as cliche as it sounds, investors don't like uncertainty, right? So, as we approached this GE15, we decided to take a very defensive stance. I mean, clearly we can't sell out of everything and just hold cash, right? But of course, we pivoted the portfolios to be a little bit more defensive, and that's how we've kept it.
Okay. Huat Soon, do you take similar approaches?
Yeah, very much similar. I speak as an equity specialist, so I'm talking about equity portfolios here. So yeah, we're not dissimilar to what Doreen has said. We were defensively positioned, kind of half expecting that the outcome of GE15 would be something quite challenging to overcome, as proven to be the case. So therefore, for the absolute return mandates, right, some portfolios were as high as 30% cash exposure, which is quite unusually high. And for the relative mandates, we raised as much as 25% cash. So we were quite comfortable going into the week of the election. And right now, we are kind of like assessing the situation as the days pass, and we strategize accordingly. But in terms of the equity portion of what we have, we shifted we shifted quite a bit into the value and the yield factors and away from growth. That's another layer of defensiveness that we put into our strategy as well. So, yeah.
Okay, let's stay with Huat Soon. How did that strategy work out? Obviously, the markets, they went they retraced, right, on Monday.
Yeah, exactly. So it was not something unexpected, given the scenario that we kind of like were afraid might unfold. So yes, there was some sell-off, knee-jerk reaction, if you recall, on Monday morning, and then came back a little bit. And today again, because of the kind of stalemate situation going into the afternoon, there was further sell-off. But having said that, I sense that there is quite strong resilience, against further downside risk to the market.
What is that?
Okay, let me show you by way of a chart, right, which I extracted this morning from the Bloomberg. Bear with me for a second. Let me bring it out. Share screen. Can you see this?
Yes.
Okay. Right, this is a chart of the FBM KLCI over a span of 5 years, 2018, 19, 20, 21, and year-to-date 22. And what it shows here, the yellow sort of line, is the forward price-to-earnings ratio of the KLCI barometer, throughout this period.
Yep.
And what I want to impress upon you guys is that, okay, this was taken this morning, so we are here in terms of forward PE. It's about 12.7 times, right? And let's look back into the previous episodes when we faced political crisis. The first one I want to highlight is the Sheraton move, which occurred in February 2020, just after Chinese New Year. There was a sharp sell down that week. I remember it occurred over a weekend, so that the early part of the week saw sell off. And for most part of the Pakatan's rule, the market was trading at around about 15 times, yeah. And post the Sheraton move, it fell below sort of 15, closer to high 14 times sort of region. And of course, COVID took it down all the way to -2 standard deviation. Okay, that was the case in Sheraton move. Okay, they were here in terms of PE. Yeah. Then the next sort of crisis was in July 2021, during which the Supreme Council of UMNO decided to pull their support away from Muhyiddin, causing him to lose his position as Prime Minister and replacing him with Masabu. So that short period of uncertainty also caused a sell-off. But then it took the market down only down to about 13.7 times or thereabouts. And where we are now is 12.7. So in terms of price to earnings ratio, we are so much below the previous two crises. So much so that I want to even highlight that it is actually at similar levels to the worst of the COVID in the second quarter of 2020. So what I'm trying to, I suppose the message I'm getting across is that the market does look really, really cheap, right? And therefore, it gives us comfort that, or rather, we feel that right now, it may be too risky, or especially for those with relative mandates, to be holding too much cash in case there is a resolution coming, and that will spark a market rally. So that's what I want to share on this portion.
Okay. Does this chart also illustrate that the downside risk is quite limited as well?
Yeah, exactly. That's the message I'm trying to get across.
Okay. Doreen, do you share the same views?
We have to say that earlier on, I think the market consensus was that, BN would win, right? But then as we approach the elections weekend, clearly, market began to assign a higher probability to a hung parliament. So, and generally, the response was that, if Malaysia actually experiences a hung parliament, which we've never experienced before, right, then it would be extremely negative for the market. But from what we see in the past 2 days, the reaction has been relatively muted, So Of course, we did see a sharp knee-jerk reaction, and I think market fell about 20 points thereabouts on Monday morning, right? But that's understandable because, as I said, we've never had a hung parliament before. But market recovered very quickly, right, and ended the day rather flat on Monday. And today, market was also down about 10, 11 points thereabouts, I think, in mid-morning or something like that, right? But then subsequently, I think market closed also relatively flat, about down 0.5% or something like that. So maybe this shows that market is relatively cheap, that things have been priced in, or maybe investors are actually waiting for something more definite to come out, right, in the announcements. So whatever the case is, I think generally, as Sun said, the market is rather cashed up at this point in time.
So what I'm trying to say is that markets have sort of priced in this scenario of a hung parliament already. That's why we didn't see such a big reaction.
I think for 2 days, yes, but perhaps investors are waiting for something a bit more definite to be announced, right? Because things are still fluid now. The Agong still hasn't quite made a decision yet, right? So we'll take it as it evolves.
Okay, but if we were to look at the bond market, right? If you look at the MGS yield, there was a big spike on Monday. Is it a sign of foreign investors losing confidence and selling off Malaysia bonds?
Could be. There was some outflow. I think year to date, there's been some outflow as well. So we'll see. I think investors generally need to know which party is in power and how long and how stable that party will be, right, before they actually put money to work.
Okay, so let's put a few scenarios out there. If this hung parliament continues, right, what's the impact to the local market?
A hung parliament is never good. It's never good for investors. Nobody likes that, right? So we want something to be announced. So I think there are various permutations. I'm sure all of us Malaysians have been furiously punching at our calculators to analyze the different permutations, right? Right. So I think the first one that came out was, BN, PN, and then GPS and GRS and all that, right? But I think BN Barisan has actually come out to say that they're happy being in the opposition bloc, right? And now I suppose, what is more likely is perhaps, Pakatan and Perikatan. But having said that, can they really see eye to eye? Who's going to be the prime minister? Is it going to be Muhyiddin or Anwar? These are still questions which need to be answered.
Would it be positive for the market if that really happens?
I think it takes away some uncertainty, that's for sure. Okay, a hung parliament is really not good. So at least something is announced. But then we need to see, how loose this coalition of coalitions is, lah. I know that if you add the seats together, it's 73 plus 82, so it's 155, right? So it is a majority, right? And it's even a stronger combination if you add, let's say, GPS or GRS. But the question is, how long can they stay together? If it's a marriage of convenience, right? How fragile is this marriage? That's always the question at the back of our minds, right?
How about Hudson?
Yeah, absolutely.
What is?
I agree with. Sorry.
Yeah, you continue.
Yeah, Doreen's view is exactly spot on. I suppose people are now talking the likelihood of unity government involving two biggest coalition winners combined. But then again, if you look at the composition, it does seem like a very discordant profile where you have very extreme ideologies being forced to come together. What I'm referring to is probably the PAS faction, which is very Islamist leaning, and then the DAP, which is on the other side, sort of seem to be chauvinistic and rich, Chinese. There's that kind of stereotyping. I think it remains to be seen how this sort of amalgamation of convenience can actually work together it takes a very strong prime minister to get a cohesive, working, alliance to govern the country. Now, with also the fact that there are so many MPs now, supposedly in the same cab, then the choice of cabinet ministers would be also something that could be a source of disagreements and source of tension within the parties in the coalition, in the alliance. But then again, I was thinking, compared to where we were pre-GE15, right? Are we any worse if it was a unity government? Because remember, before GE15, we had Ismail Sabri running the country, but even I feel that his support was very, very tenuous. He had 114 MPs sort of supposedly backing him. A large part of which is actually Perikatan, who reluctantly, endorsed him as a prime minister, right? It was a very weak formation. It was a very weak government. And I think going forward, even if we have a unity government is not a perfect solution. But is it any worse than where we were before? So I think Malaysia is, to borrow a phrase that one of the politicians I heard saying, is going through a maturing democratic process where two-thirds majority, which people my generation are used to, is actually no longer possible. I mean, it's very rare to expect that. So going forward, slim majorities, coalitions, and stuff like that will be the norm going forward. And I think the market will need to get used to this and probably discount, maybe, I don't know, assign a kind of a high risk premium to the new political order that we are supposed to sort of gravitate towards. Yeah, I think let's hope for a workable solution. It's unlikely to be perfect, and see how it goes. But I think as fund managers, we will have to be very, very close to the ground to see whether this kind of stuff will come.
So, in other words, I think both of you agree that no matter what government comes out, it will take away some of the uncertainty. So, in other words, that's more positive than negative going forward. Should it be a time to start positioning into the market again? And what are the sectors that could benefit from this? But maybe Watson can give your thoughts first.
Yeah, I guess for the ones who are really worried or fearful of negative of the political risk, we recommend that investors like this should be looking at opportunities, stocks which are non-politically sensitive, or what we call politically agnostic sectors. Because I think we got to cast our view further beyond the problems of domestic politics. I think there are forces working out there that could present opportunities for people to make money. For example, for more than 12 months, we've been worried about inflation, getting out of control, that interest rates in the US could go as high as 15%, that kind of thing. But slowly and surely, we're seeing some signs of moderation in inflation. Hopefully, a few more months of inflation reading coming below expectations could set the path towards pivoting on the dovish side for the Fed, and that will set the market up, on a firmer footing. So I think for that, you play on that theme, right? You have opportunities like technology sector, which have been sold on so badly, right? And these are interest rate sensitive. So if interest rates does peak, there'll be a flow back into, say, technology. The other sectors which are politically neutral would be things like REITs, which gives you yields, retail and consumer staples, those are safe. Whoever comes into power will always pander up to not necessarily pander up, but sincerely want to help the B40s and M40s, right? So at least you keep give cash aids to help them, making ends meet, and therefore, consumption will probably be supported. Then we have, I suppose another sector, not really sector, but maybe regional place that we might consider would be the Sarawakian place, or Sarawak place. I think because I think
Okay, interesting.
I think politicians should know by now how important the East Malaysians are in providing support, political to provide them the leverage to power, right? So they will have to pay close attention to their needs whenever they say, work on budgets to make sure that enough allocations is set for them. There are a number of Sarawak companies which I don't mention here, but for obvious that could benefit from this kind of shift.
I see. How about Doreen? At your side, are you having similar positioning?
I think not very different, right? Because first up, no matter which party comes into power, I think they really have a lot of work to do lah. They need to basically get to work quickly, right? Look at how to strengthen the economy, increase the resilience of our economy, right? Bring the country forward. Make sure we are positioned to face all the future challenges or even today's challenges, right? And look at various areas to actually support the citizens, right? But I agree with Huat Sun. I think there will continue to be populist measures in a way, right? In terms of like cash handouts, to actually assist the B40 and I think even the M40 maybe, in terms of addressing the higher cost of living. So we continue to like consumers, but having said that, we also know that they probably will tighten their belt, inflate. They're probably feeling some pinch, in their pockets. But we still think that it will grow, though not as strongly as in the recently reported quarters. So consumers, still look okay, right? And of course, the financial sector, like banks, like in the rising interest rate environment. Of course, investors out there are saying that, hey, inflation is probably not going to be as high as expected, or even maybe it has peaked, right? And therefore, maybe it's time to pivot and things like that, right? But we still think that there's a bit more, way to go in terms of interest rate, rising interest rates, right? So in that scenario, we still hold on to banks, but probably the NIMs may not rise as much as before, because I think we're seeing some deposit wars, and also we need to monitor for upticks in bad loans. So there are things that we like, but we're also monitoring them closely to see if there are any changes in the drivers. Right. And the tech sector, longer term, the story is there. Shorter term, in a rising interest rate environment, clearly it's under pressure. If past plays a bigger role in the new government, then clearly the sin sectors are something that we should probably be a bit cautious of lah. But they have come out to say that they're not going to impose too much restrictions and things like that, right? But you've seen the reaction in the sin stocks. Yep. I think they're down about 5-6% on the first day. Today I'm not quite sure, but yesterday I think down 5-6% thereabouts. Yeah. So generally not that many changes in terms of sector preferences. But the sin sectors is something on our radar, of course, to be a bit more cautious of.
Okay. Yeah, I was looking at some of the market opening numbers. Genting was down more than 10%. Genting Malaysia, I think, also close to 10%. Some of the numbers forecasters also were down. Alcohol stocks were also down. So should investors continue to stay away from this? Do you think so, Huat Sun? Or do you see opportunity over there, since the PN government have come out to say that they won't disturb these industries?
Well, I guess if one were to view this sharp fall as an opportunity, maybe there is a trading opportunity for very short-term oriented investors. But if you were a pension fund manager with a very multi-year view, right, I think I'll be careful because, pension funds, you're talking about investing over a period of 10 years kind of thing. My concern is that in the context of Malaysia, right, there could be a case to structurally derate the same sectors because regardless of whether past is there or not, right, I think we have to recognize that the demographics changes in Malaysia points towards one where there is a growing presence of, a group of young people who are sort of more predisposed towards the Islamist ideas, very altruistic, kind of ultra-conservative religious practices, right? Whether this is real or not, I can't say for sure. I'm not an expert, but certainly I think it's quite fair to say that, at least in terms of perception, right, amongst foreigners, even amongst certain segments of Malaysian society who are non-Malays, right, there's this strict religious order that will discourage the proliferation or expansion of businesses that are related to sin kind of activities. So we get concerns about, does it mean that, beer consumption will have to be more discreet? You cannot sort of do al fresco style drinking, right? Even though they're not going to ban it, but because of the scaled down consumption behavior that they expect, then maybe that would curb the business expansion. I mean that's the kind of images and concerns that some people have, and these are decision makers now. So I think so. Therefore, structurally, there is a case that if you're a long-term shareholder, you may want to look elsewhere. You want to.
I see. So there's a chance that the investment community would be derating some of these sin stocks following the outcome of this GE election.
Yes, that's the impression I get. In fact, we had a discussion this morning also amongst ourselves, fund managers of Maybank. And one colleague of mine said, yeah, actually, even in 2019, there were scares about, remember last year, Kedah actually shut down the outlets, right, for NFOs,
Yeah.
Because property is a state matter, so shops cannot run numbers games, although federal government say you can. And that caused a mild sell down in the total magnum. Mild because Kedah doesn't have very many of them. Doesn't contribute much in terms of the total. But I mean, it's just an instance which I want to highlight that this kind of fear can be enlarged as time goes by. Again, it's just my observation.
Other than so I mentioned casinos, alcohol, breweries, and also forecasters. Any other industries or sectors that, in addition to these few, that we should be more cautious on?
Well, I have a slightly different view. Okay, from Doreen with regards to the banks, I agree with her. I think the case for investing in banks, because there's still some leg left in terms of the interest rate hike and therefore NIM expansion, one should be in banks. And I think Malaysia's economy has done remarkably well this year, despite the headwinds.
Yep.
Right? 14% GDP growth in third Q, and we're heading towards something like 7% for the full year, so 8% come back. But anyway, on very solid ground. So, but having said that, Perikatan has mentioned in the pre-election, one of the pre-election manifestos or whatever, that they will want to consider getting banks to extend the targeted repayment assistance scheme, which means that they'd like to see banks being gentle on the financially challenged by extending moratoriums. That may not go down well. But this is a small matter, I suppose. But I think the bigger concern also is because of windfall tax. There was one ceramah which is quite well publicized, in which Pakatan leader said that what's wrong with charging windfall tax on companies that make billions of dollars in profits. He was referring to plantations. So that's one where one has to be very careful about as well. Yeah, I think that those two sectors are probably ones which I want to be a bit more careful on top of sin sector.
I see. What about Doreen? Any sectors that are other than the few that Huat Sun has mentioned?
I suppose toll roads. Toll roads was actually mentioned in Pakatan's manifesto, right? I think the ultimate aim is to bring down the toll rates, so this will clearly have a long-term adverse implication, on concessionaires. So toll roads is one. And if Pakatan comes into power, and if the previous, the previous example of how they actually ran the country, if we can refer to that, right? And there may be some risk to the construction sector. There may be, right? If, for example, they choose to review some of these projects, there could be delays and things like that, So there could be a bit of some uncertainty in construction, right? But in terms of broadening the tax revenue, right, the tax base, we don't think Pakatan will actually opt to go and basically reintroduce GST again. Probably not, right? But they may introduce some form of windfall tax, like what Huat Sun said, right? As a means, of improving the fiscal position of the country. I think, as I mentioned, there's a lot of work to be done, and structural, decisions need to be made. The government needs to show that they have the will to actually push through. Whether it is in terms of increasing the revenue base, or basically implementing the targeted subsidies and things like that, So there's work to be done. Yeah.
Is the small cap space a better place to put your money in case of any windfall tax?
Well, we
because
can't say so.
they would only tax the companies making bigger profits, right?
Yeah, correct. I mean, it depends lah, which sectors are actually hit with this tax, right? I mean, it depends lah. It really depends. Yeah.
But it could also be just a one-time tax, right? So similar to what happened before. Subsequently, like the banks were definitely hit, but subsequently they did recover. So would any retracement be an opportunity?
For what? For banks?
Or let's say the windfall tax does happen because it's just a one-time thing on 1 year of profit. Like what we have seen before, they did eventually recover. So
Yeah.
so probably
I suppose what we're saying is that it could come in another form, it may not be to come up more, it could come in another form, right? They can call it any other name they want, but I think the point is that they need to actually do something to improve the fiscal position of the country. But it could come in any form. Yeah.
Okay. Huat Sun wanted to say something?
No, actually, I agree with Doreen. Yeah, I think, we had to look at things from a broader perspective. I think the government needs the funding. Which brings me to the subject of the budget, I suppose, because after 3 years of very heavy spending to fund the COVID relief programs, right, we find the fiscal position of the government is not so healthy anymore. I mean, we used to have statutory debt to GDP ratio well below 55%. In 2020, we had to raise it to 60 because of this funding. And then that's not enough. 21 was another big spending year. We had to raise it to 65. Now we are close to 60% already. And fortunately, the GDP has been very strong. So that brings the debt to GDP ratio down. Otherwise, it would have been worse in terms of the ratio. But I think we have to own up to the fact that it is really time to consolidate the balance sheet. You don't want to get in a situation where you get derated, then our borrowing costs go up, and then it's really damaging to the economy. So I think the new government that comes in will have to look at this very seriously. I mean, even in the short term, our budget 2023 is not sorted out yet, right? Because it has to be retabled. And hopefully we get the things sorted out soon, so that before the end of December, we get the budget 23 retabled. I'm not sure whether it can be passed in time, but and so that we start 2023 with a full budget ready to spend and run the government well. But in the event that doesn't happen, then they have to have a special session to pass a supplementary budget, at least to fund the government running expenses for the early part of next year.
Okay.
So hopefully that happens, and then we can, I think we really have to look at budget 2023 now, see what changes there are. There could be another market moving event.
Okay.
Again, I suppose, like Doreen has said, I think we have to be watchful over how the government is going to do this fiscal discipline. There has to be new streams of revenue. GST has been mentioned. I don't know whether Pakatan is going to backtrack and say, maybe we were wrong in 2018. GST. What happened GST, right? There was a knee-jerk reaction. Although it really, in the long term, it really makes sense, in my opinion. And there could be progressive tax, which means that tax the rich more, possible, happen. So there are worries to think about next year.
So you mentioned about debt to GDP. What's the implication to markets if, let's say, the debt to GDP goes over the limit or gets worse?
Well, then yields will go up, and borrowing costs for the country will rise. It's poses a challenge for everybody. Our risk-free rates goes up, or PE derated. So it's a very bad thing to happen. I think the government should really pay attention to keep our fiscal balance sheet strong and healthy. It's not too bad at the moment, but just don't let it deteriorate.
What's the best case scenario from this election that you would say would boost markets? Then you see a big rally in the market. Would a 2/3 majority government, for example, like PH and PN coming together, give a big catalyst to boost markets? Because, as you said, we haven't had a 2/3 majority government in quite some time now.
Well, in the old days, we had very strong government in the form of UMNO-led BN. And we were so used to the way we were governed, to the extent that we took it for granted that it's the way it should be. PM Mahathir ruled for 22 years, most of which were one of the best in Malaysia, supposedly. So, but that kind of huge coalition, BN coalition, is a bit hard to come by these days after what happened. I don't know. I don't have an answer to your question as to what's the best case scenario.
Doreen, do you have an answer to this?
It's a difficult question to answer because there's so many like permutations, right, as we said.
Okay.
But I think the 2/3, if it comes from, the cobbling together of a few coalitions, right, then we go back to the question of how sustainable, these coalitions will be. In the past, of course, you have one single party commanding 2/3, right? So then that is actually quite stable. But we're not even talking about that now. I think Huat Sun is basically saying those days are over, right? Now we can't even get one party to cross in this particular GE, we can't even get one party to cross the 50% mark, right? What more 2/3, right? So when we find ourselves in this situation, then clearly, we need to, look at the ideologies of each of those coalitions to see whether they can really come to some form of compromise. And if they can't, then clearly it's fragile. And if it's fragile, then, in the near future, there could be some shakeups, and we may get a repeat of the past, right? So what we really want for the country is a government that is stable, right? Investors will need certainty before they decide to put money to work in the country, whether it's in terms of FDIs or portfolio flows, right? Portfolio inflows. Right? So they need some form of confidence. They need to know that the government is actually strong, clean, right? No corruption, right? So these are some of the ingredients, the basic ingredients that I think any investor would want.
Okay, hopefully we get to see that soon, and we should see a good rally in the markets. In terms of your portfolio positionings, how has it changed based on the election results?
Based on the election results, I think so far it's still pretty uncertain in terms of the outcome. As I mentioned at the start, we have actually gone into this defensively, we position it quite cautiously because you never know, right, what might happen, right? So we were quite defensive in that sense, right? And we haven't really changed our positioning much. So I guess we along with the rest of the market, we are watching, today it was all about checking the news, seeing what's coming out, right? So I think together with the rest of the investors, that's what we're doing, trying to see what is going to come out and trying to reassess after that. But it could be a bit too late to actually react, like if something happens, right? Correct or not? Correct?
Yeah.
So so our preference was to actually stay cautious.
Okay. How about Huat Sun at your side? Has your position?
I guess we are cautiously picking up stocks because, as I say earlier, the market offers great value. Seems to have priced in an uncomfortable outcome anyway, post GE15, and we don't expect much in terms of a great government actually eventually formed. But then again, it's kind of priced in at a P of 12.7 times. Hopefully, not much earnings downgrades, if any. So we are comfortable at this level to nibble. As I say, even in doing so, we are doing it with care. We are positioning in sectors which are a good mix of political agnostic kind of stocks. In the form of buying back some of the tech stocks and selling off, for example. Get some yields into the portfolio, some consumer staples. Another thing I forgot to mention is healthcare. Healthcare.
Like
something is. That's controversial. But I think a 5-year investment horizon, I think you just close your eye and just go in. But I think nowadays fund managers have to be very careful as well because we are accountable on sort of like, I don't know about you, Dory, but this is we are accountable shorter term as well. So we'll try and time our entry accurate, precisely, hopefully. But gloves, I think long-term value is there. I'm thinking more in terms of the pharmaceutical place. because I think whichever government comes in, again, it's going to be supposedly caring government, look after the B40s, the elderly, and so forth. So they want to deepen the capacity of the healthcare services in Malaysia.
Okay.
So I suppose you can probably expect more subsidized medications and so forth. In fact, I think Pakatan went as far as saying that they want to see healthcare allocation in the budget to eventually hit 5% of GDP by 2025. Right now we're only about 1.82%. So that's a long way. And if they really honor their promise, then you're going to see big healthcare spending now for the next 3 years. And yeah, healthcare is something we're looking at as well.
What about
I think healthcare was mentioned across the manifestos.
Yeah.
So I think all of them basically are, looking at raising healthcare allocation to 5% of GDP. Although I agree with Pak Sun, I think PH talked about doing that in 5 years, whereas I think Perikatan didn't have a timeline. But whatever it is 5% of GDP, right? So healthcare, yes, I think the focus is there across all three manifestos, whether it's BN, PN, or Pakatan. But when it comes to gloves, well, that's a tricky one. Yeah, but I agree that as investors, there are opportunities in all cycles, right? As long as there's volatility, we can basically position our portfolios and take advantage of the different cycles, right? As cautious and as defensive as we are clearly looking at this in the short term as well as long term. So we've got the short term horizon to look at, and we've got the longer term horizon to look at, right? So short term, if there are any sharp corrections, for example, and certain good quality names, fall to certain interesting levels, then maybe it's not a bad idea to actually pick it up, right? So, but of course, we don't think that the correction has been sharp at all. It's quite muted in the past couple of days, but who knows, right? After the announcement comes out and things like that, we're not sure. But what I'm trying to say is that there are opportunities in the short term, and there are also opportunities, to build longer term positions for our portfolios.
We've talked about the equity and bond market. I also noticed that ringgit on Monday's open spiked up to 4.59 against the US dollar from 4.55 last Thursday. Is it because of a loss of confidence, or is the ringgit undervalued right now? Do you have any views on ringgit?
For me, not really. We don't have any strong views on the ringgit, but clearly, I think when there is uncertainty, then I think the currency reacts to that, so that's a sign of a reaction to the uncertainty, right? But I think if we look beyond that, right, generally after the dust settles and things like that, I think most investors will refocus on Bank Negara's next meeting, which is in January next year, right? And generally we feel that there is a bit more to go in terms of raising interest rates. The tightening is not quite complete yet, we believe, although I think some investors are actually calling for a pivot and things like that, because the degree of increase in inflation has actually reduced, right? It's coming off, right? And I think investors are basically saying that, especially in the US, they're saying that, the hike in the interest rates may not be in that sort of quantum anymore. It could be less. So therefore, that is seen as a pivot to them, right? But generally for us, we still think that there's a bit more tightening to go, whether it's in the US or here in Malaysia, right? So generally, So generally, we go back to the fundamentals after everything. Yeah.
Okay. For Hudson, do you have any views on ringgit?
Well, I guess the weakness of the ringgit against the US dollar could be partially due to the fact that the interest rate differentials between the US and our
OPR.
has widened quite a bit. I mean,
Yep.
if you remember correctly, the Fed funds rate increased by 300 basis points this year, whereas our OPR is only gone up by 100.
Yep.
So there you go. So in terms of in fact, right now the Fed funds rate is higher than OPR. It used to be the other way around. Plus the fact that there's this political uncertainty that also doesn't help the ringgit much. And since September, there have been sell-off by the foreigners in the equity portfolios. I'm not sure about bonds. I suppose bonds as well. So all that contributed to the weakness in the ringgit. So yeah. Well, I'm not really kind of say, but I can tell you why it's been weakening for much of the year against the US dollar. But to get a handle on where this fair value is, I refrain from commenting because some issues.
Okay, thanks for that. I think we have a bit more time to take some questions from our viewers. I have one question that regarding the defensive and risk management measures that you have taken heading into GE15. Should retail or individual investors also do similarly? And why?
Sorry, the question is whether they should be defensive going into the elections, is it? I mean,
or even now.
it's a bit, it's probably a bit too late for that now, I think.
What about in future elections?
I suppose it's a question of uncertainty, right? But I mean, you could be on the wrong side. It is something that you do in terms of risk management, right? For better or for worse, you have to make a decision, right? I think if market rallies very strongly post an election, then there'll be no time to actually catch the upside, correct? I think we experienced it in the recent, the previous election, or was it the one before that? Yeah. So I suppose you have to look at the objectives of the portfolio, whether it's more capital preservation, whether it's more benchmark to the market, things like that. So it really depends, and also to a large extent, it depends on how much risk you can stomach,
Okay. So if I were a conservative client looking at more on capital preservation, then I should take some risk management strategies, I would say. But if I were... Okay, so it depends on the individual investor, their own risk profile.
Yes, but I would also say that it's probably all right to carve out a certain portion of your portfolio for trading purposes, for example. The size of that position clearly depends on your risk appetite. You could take a couple of percentage or something like that, to just trade on the possible upside. You may get it wrong, you could very well get it wrong. Then you have to be prepared to actually lose on that portion of your portfolio. But there are various strategies to actually use, right? So it really depends on how creative you want to be and what kind of diversification you want, what kind of upside you want, and how all those match with your investment objectives and risk appetite. Yeah.
Okay. For Hot Soon, do you have any advice for retail investors?
Well, I think it depends on the individual. I mean, someone of my age, I suppose, can't be too risk-taking at the moment. So probably stick with safe, tested stocks, which gives me the yield to generate income that it needs. Whereas if you're young, 30-year-old or a long time horizon, you might be able to stomach more risk and therefore take a long-term view, have a more aggressive tilt for high returns. So it depends. You mentioned just now small cap names. I guess there are plenty of really overly sold down small cap technology stocks, right? Which is great fundamentals, which you may consider picking up for sort of a 3-year return. That kind of situation. It really depends on the person.
I see. Okay. Let's move on to another question. Seems like there are a lot of people asking about the increasing Islamization or potentially populist measures. Could that have a severe market impact if, let's say, yeah, these really do come into play?
Maybe, yeah.
Some examples of
If there's
populist
a,
measures. This viewer has mentioned moratorium without additional interest, higher Bumi discount for property purchases. Would that, yeah, yeah, what's the severe impact to the markets from that?
well, the latter two examples are things that it's not unfamiliar to us, so I don't see how it can impact in a big way. But as to the question of whether Islamization of consumption and the curbing of sin stocks, I suppose the impact will be very gradual. It's not going to happen overnight. But as I say, this fear seems to be seeping in, and there's a perception amongst foreign investors that this move towards theocracy kind of a order may not be may be misaligned against sort of free market principles, right? And so therefore they will stay away from those sensitive sectors. Yeah, as I say, there's a risk of structural decline in the valuation of these stocks. Because as I said, the growing demographics may not be conducive towards the expansion of businesses of that nature. So maybe, yeah, it's better to look elsewhere beyond the sin sector. I mean, but if you're looking for value for a short-term trade, I think there is opportunities, but not for the long term.
But not for a long term. Okay. Okay, cool. Anything you want to add, Doreen?
No, I'm not an expert in this area, seriously, whether Malaysia will turn into an Islamist kind of country and whatnot, right? But I still believe that, we'll probably be more moderate because
Okay.
yeah, I mean, diversity is encouraged, right? So I believe that moderation is something that is important for any country to actually move forward.
Yeah, maybe that's the whole idea behind the unity government, right? To be inclusive and get everybody's sort of look after each other's needs and yeah, and so maybe it's an effort to actually contain any individual group's will against hitting one group's will against another. So I suppose if there's something good about unity government is that there's this balancing of interests among the disparate groups. Yeah, so I agree with Doreen. Maybe it may not happen such a sudden way. Maybe there's going to be how do you say maybe mutual education amongst these disparate ideologies, and hopefully we come to some common ground. We don't move towards the extreme. I don't know. Yeah, but certainly right now, because this happened just this week, right? Maybe the fear is there. It's fresh. It's a fresh wound, I suppose. But as time goes by, maybe we'll regain our composure and yeah.
Hopefully everything turns out okay.
Yeah, hopefully too. Yeah.
Yep.
Hopefully.
Yep. Okay. So to wrap things up, I think there are a lot of questions from the viewers. But in essence, if you're not sure what to do, we have professional fund managers managing the funds. You can definitely place money with them. They'll know when to employ risk management strategies. They also know which stocks or which sectors to avoid and which to overweight in to capture the market rebound, things like that. So definitely, that's why we are here. I think that's all the time we have for today. Perhaps we could end with a short message from each of our panelists today. Maybe we start with what is the key message or the key takeaway that you want our viewers to hear from you today. Maybe start with Doreen.
Key message. I suppose For investments, you need to have a longer term horizon, right? Approach investments from various angles, right? Take the different risks into consideration, match it with your risk profile. And as Pak Sun said, it depends on your time horizon as well. I mean, if market corrects to, like very sharply, it could be like an opportunity of a lifetime for you to pick up something, right? Depending on your investment horizon. But of course, clearly, risk management is important.
Okay. Moving on to Hudson, what's any key message you want to send out to our viewers?
Mine is very simple. I always believe that people shouldn't speculate. Do your research.
Okay.
Think through carefully before you buy a stock. Yeah, I mean, it's as simple as that. And know how much risk you can take. Yeah, that is important.
Yeah, I believe in that too, because if you know the company, that it's a good company, it'll do well regardless of whatever government that comes in. Definitely it's a stock that is worth holding on, right, for the longer run. So those are the ones that we should be looking at, or even the fund managers are looking at. So I think that's all for today's session. It was great talking to the both of you. I hope our investors or our viewers had an insightful session as well. So thank you, and we'll see you guys next time.
Thank you.
Thank you, everyone. Bye-bye.
Thank you. Bye-bye.